Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Tuesday, 25th November. Coming up on the show, Google flexes its AI muscles. Its AI chips are in demand. Trump and Xi hold their first call since the US and China struck their trade truce. And even though some big AI names are falling, we're still seeing some big gains in the sector. I'll tell you where exactly. So grab your coffee and let's own the morning. Well, shares of Alphabet, the Google parent, are continuing to rise in the pre-market. Today's move looks to be motivated by a report in The Information. It says that Meta is in talks to spend billions on Google's AI chips. Meta is among the biggest spenders on AI infrastructure, with the company projecting its capital expenditure to stand between $70 billion to $72 billion this year. Google's efforts to be top dog in AI seem to be gaining traction. As is often the case, where there's a winner, there's always a loser. In this case, it looks like Nvidia. Its shares are down heavily in the pre-market, over 3.5% there. Now, Nvidia still remains the market leader, but companies that are building AI infrastructure, well, they're looking to diversify the chips they need in order to reduce reliance on Nvidia. Don't forget, Alphabet shares have been on the rise in recent days. The surge in optimism over the latest version of its Gemini AI model providing major support. Well, here's our tech editor on the impact Gemini AI is having on the AI race.
Google, really, they announced this Gemini 3 model last week, and since then it's kind of picked up momentum when it comes to executives. Mark Benioff at Salesforce basically saying in a post on X that he's just going to leave behind GPT now and just go with Gemini. That's a huge vote of confidence for this model. And in different benchmarks, it appears as though Gemini 3 bests ChatGPT, or rather GPT-5, in a number of areas. So this is really helping to boost the company's stock price, because it more or less shows that, it's not necessarily a one-horse race when it comes to these kinds of things where, ChatGPT, or GPT rather, had the lead for a while, and now Google's come out and said, all right, well, we're going to take it back. And so it's good at everything from, your reasoning to things like coding, which is actually incredibly important in this area, because a lot of companies end up using these kinds of AI models for some coding capabilities. And so the fact that it's able to outcompete GPT-5 there is hugely important for Google. And so, bottom line, investors like this, and it shows that those investments are paying off, at least as far as advancements in the AI models. Now, as far as what that means for their actual business and revenue, we just have to see.
And also, Dan, you wrote about Anthropic's latest AI model. What's the news there, and what does that mean for kind of the broader competitive landscape?
Okay, well, Gemini 3, that was in the lead for a few days. And now we have this new version of Claude from Anthropic, Claude 4.5, that Anthropic says is better than Gemini 3 and Pro and GPT-5. And so, it really is this kind of cycle where you see one company come out and say, look, we've got the best model. And then the next thing is, oh, we have the next model. And then the next, it's kind of this cycle. So no one is ever really on top. As I said, it's not a one horse race. We keep seeing all these companies come out with new models. And then, they'll best someone as far as coding. Someone will best someone as far as reasoning. And so, I think we spoke about this last week when Gemini 3 came out, is that it really comes down to what individual enterprises want to get out of their AI. And then on the consumer side, what you want to get out of the AI that you use. And so, there's no win all be all at this point.
Well, the first thing you need to know is that Presidents Trump and Xi spoke for the first time since they thrashed out a trade truce last month. The two leaders discussed several areas of bilateral and geopolitical tension, according to readouts, including China's purchases of US soybeans and the self-governing island of Taiwan. Now, Trump touted the call as very good and said he had accepted an invitation to visit Beijing in April and that Xi would reciprocate with a visit to the US later next year. The next thing you need to know is that China is making its own strides in AI. In fact, in the past hour or so, Alibaba, the country's largest e-commerce player, has just released its second quarter results. It's reported better than expected revenue growth as sales grew 5% to $35 billion. Its cloud revenue, get this, rose by 34%, and its AI-related product revenue recorded its 9th straight consecutive quarter of triple-digit growth, driven by robust demand from external customers seeking high-performance infrastructure. Remember, its revamped Qwen AI app was downloaded 10 million times in just 1 week. And the last thing you need to know is that hopes for a Fed rate cut next month, well, they keep rising. According to the CME FedWatch tool, the markets are now pricing in an over 80% probability of a rate cut next month. Bets on a cut jumped after Fed Governor Chris Waller added fuel to hopes by joining a growing chorus of policymakers advocating near-term easing. Now, Fed comments have been one of the few clues available for gauging rate cut odds amid the economic data gap caused by the historic US government shutdown. Well, those delayed releases have started to arrive this week. Here's my colleague Josh Lipton with the details.
All right, time now for what to watch Tuesday, November 25th. We're going to start off on the economy. We're going to be getting a rush of economic data on Tuesday, including the delayed U.S. retail sales report for September. Economists forecasting retail sales to slow compared to August to 0.4% on a month-over-month basis, signaling that spending is still growing, but at a cooler pace than the previous month. And speaking of retail, a lot of earnings coming out on Tuesday, including Dick's Sporting Goods, Best Buy, and Kohl's. Dell also reporting announced results for the third quarter after the markets close. Analysts expecting Dell's AI server sales to drop to $5 to $6 billion in Q3, down from $8 billion last quarter. But new orders could pick up again soon because big AI projects tied to NVIDIA's new Blackwell chips. And moving over to housing, we're going to be getting pending home sales data for October on Tuesday. That number expected to move to 0.4% for October, suggesting a modest improvement in the housing market.
Well, those retail earnings that Josh mentioned have just started to come in. I'll have the details for you later in the show. It's time now for a short break, but when we're back, my colleague Jared Blickery has some Thanksgiving treats for you. Welcome back. I'm sure you're already gearing up for a feast on Thanksgiving, but before you do, you should make sure you figure out the right recipe for your investment portfolio. Our data editor, Jared Blickery, has some really juicy insights served to you now with plenty of food puns and metaphors.
It's Thanksgiving week, and it's time to think about how much risk you're stuffing into your portfolio. Is it just right, or have you overloaded the plate and set yourself up for a Black Friday food coma? That's what we're breaking down today on Stocks in Translation, so let's start by building a Thanksgiving portfolio plate. We start with the main course. Turkey is your broad market core, S&P 500, the thing most of your calories come from. And right alongside, mashed potatoes and stuffing, our comfort food. Think defensive sectors and bonds. These positions may not be exciting, but they help keep your returns more stable when someone spills a big dish and everyone's reaching for napkins. Then comes the gravy. These days, that's your AI and growth exposure, tech, semis, the names that have done almost all the heavy lifting this year. Gravy makes a meal, but remember, you've already got a big chunk of exposure thanks to your turkey, the S&P 500. Watch out for concentration. Now let's move on to the second plate. Cranberry sauce is your speculative bets. The high beta ETFs, Bitcoin, crypto, the stuff that can light up the table or blow up your appetite. Ideally, it's a spoonful or two, not half the plate. And remember, not everyone likes cranberry sauce, and that's okay. Pumpkin pie is a fun money bucket. Single stock trades, meme names, tiny positions you size with care so that if they go to zero, you're still having a great holiday. Now that's the menu. Let's look at some strategies for serving up the main course, the turkey. In this chart here, we have the S&P 500 with two different weightings. The market cap version, the one we usually watch, and the equal weighted version. Both over a couple years here. Cap weighted is like loading your plate with only turkey breast from the top 7 or 10 stocks. And to be fair, that's tasted pretty incredible during this 3-year bull market. The cap weighted index has crushed the equal weighted version, both short and long term. Equal weight, though, is the plate where you take a little bit of every part of the bird, some white, some dark, even a little wing. That gives you more industrials, financials, and some of the smaller names in the world's biggest stock market index. Just something to think about. Now we got to get into Thanksgiving family dynamics. Every year we have the aunt who brings some unloved side dish. Here we've got small caps, REITs, or real estate investment trusts, and international stocks, which have actually done very well this year. But not everyone's piling into the green bean casseroles of the market right now. If you do, and it doesn't work out, you can always sell it at a loss and take the tax deduction. Whatever, just don't give it to the dog. Then there's the uncle who always insists on talking about uncomfortable politics. Here we have gold, the dollar, and foreign exchange, as well as those protest trades in crypto. This is where all the loud deficit talk shows up. And remember, he might have a few great points. And to be fair, gold is absolutely trouncing the S&P 500 this year. But selling the farm and buying physical might just be going a little bit overboard. Your job isn't to trade every hot take, it's to decide which of these actually fits your risk tolerance and your time horizon. Finally, here's our Thanksgiving week market checklist. With Wall Street traders away from their desks, lower liquidity can magnify moves. Headlines can theoretically hit harder, but most years, it's pretty smooth sailing. Nevertheless, we have seen some big surprises. In 2009, 2014, and 21, we got some pretty big Black Friday moves. Some were great buying opportunities, so watch out for those food comas. Friday's session is only half a day, from 9:30 a.m. Eastern until 1 p.m. And the Yahoo Finance team has you covered around both of the bells, and our editorial team will be bringing you the stories and stats that matter. That includes some of the big key numbers from the big box and cyber retail numbers that Wall Street will be watching and trading off of. And while you're waiting for the turkey to be carved, tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
No matter your risk appetite levels, I'm sure, like me, you also got lots of valuable insights there. That gift from our data editor, Jared Blickry. Coming up after the break, the AI stocks that keep rising despite bubble fears. And no, it's not just Alphabet. It's time now for today's trending tickers. The stocks moving in the pre-market and early trade. And while Nvidia and Oracle have been going down, some others are seeing big gains. One of the biggest names, Broadcom. Now, its stock has been lifted by renewed demand for AI hardware, including product launches of new switches and expanded infrastructure deals. Broadcom is clearly benefiting from its custom networking and data center gear ramp. And demand for AI and automation is also lifting some volatile stocks today. Symbotic is one of them. The warehouse automation company is rallying after showing strong revenue growth of 26% year on year for the fiscal 2025. And just look at how much the stock is rising. One note of caution, we are reading several analyst reports out there who think that the stock is overvalued, although there seems to be consensus that the company's growth is real. On to Zoom. The work communications platform got a shot in the arm from its upbeat results, in which the CEO touted a very positive outlook for its AI enterprise solutions. The company reported Q3 revenue of $1.23 billion, up 4.4% year on year, and an earnings per share of $1.52, both beating estimates. On the other hand, Oracle is definitely having a hard time reversing investor sentiment as questions continue to mount around its leveraged bets. In other words, investors fear that if there is an AI bubble, Oracle is first in line to crash, and that's because the stock's growth had been fueled by massive debt, and many investors are saying the timeline for expected returns might have been a little bit too optimistic. And look at this, Oracle has lost as much as 30% in 1 month. For some portfolios, that's starting to really hurt here. Now, let's stay in tech, but moving to China. Pony AI. The autonomous vehicle startup just announced a European partnership via ride-hail app Bolt and aims to ramp its robotaxi fleet to over 3,000 vehicles by 2026. It's part of China's push to export its robotaxis, trying to beat Google's Waymo in key markets around the world. And this is a really interesting space that I'm sure Google is watching very closely. Yesterday, we told you about WeRide, another Chinese robo-taxi company, and clearly both WeRide and Pony are making big inroads in the Middle East and Europe. Moving on to Bitcoin. Now, the crypto world is on edge as the world's largest digital currency has now lost over 30% since its October peaks. That's quite a crash and a moment of doubt for many retail investors, institutional investors, and even for long-time industry players. In the past 24 hours, we've seen early signs of a potential rebound around the $87, $88 or $89,000 mark. So what's next for Bitcoin? Well, my colleague Inez Ferre explains.
The entire crypto market has lost about 29% of its market cap value since October. That sizable pressure down that you saw on Bitcoin. Bitcoin is down about 29% from its all-time high in October. That's counting in today's bounce that we've seen and the bounce that we've seen since Friday. And this is because of the dovishness that's come out of some Fed officials about a possible rate cut in December. But the question is whether or not this is a bounce which will be long lasting. And there are strategists that are cautious about this because 10x Research doesn't think that this bounce will continue on. They believe that it will fade going into the FOMC meeting. And that's because if it's a 25 basis point cut, that's considered to them a sort of a hawkish cut. If it were 50 basis point or if there was a lot more dovishness coming out of the Fed, then it would be a different story. Sean Farrell over at Fundstrat on Friday was just questioning whether you'd see a meaningful leg higher if you still have AI angst in the equity market, because if you see that turning around, then it would be hard for Bitcoin to outperform. So it's sort of a wait and see. But what could be catalysts that send Bitcoin and the crypto market in general higher in the future? Look, definitely Fed dovishness and also the Clarity Act, but that won't be likely this year. And then whether or not strategy makes it into the S&P 500.
Well, as we approach Black Friday, it seems appropriate that we focus on retail with some breaking earnings. First up, Best Buy. Good news from the electronics retailer. Adjusted earnings per share was expected to come in at $1.30. Well, it actually came in at $1.40. On the revenue front, the street was looking for $9.58 billion, but it was an easy beat too at $9.67 billion. Now, it's not a surprise that the shares are rising there, as you can see in the pre-market, up over 3%. It also says that it expects to buy $300 million of shares in 2026 too. Okay, next up, Kohl's. And more good news. It raised its full year outlook for the second straight quarter, a sign that the chief executive officer there, Michael Bender, is helping to stabilise performance at the struggling retailer. Remember, he was confirmed as permanent CEO just yesterday. Now, the retailer also sees net sales declining in a range of 3.5% to 4% for the full year, a smaller drop than the projections offered in late August. But in the third quarter, comparable sales actually fell 1.7%. And again, that was better than what analysts had been expecting. As you can see, though, shares up around 23.5% in the pre-market. Okay, last one, Dick's Sporting Goods. It's boosted its outlook for a second consecutive quarter, citing expected sales gains from existing stores. Now, the company's positive results add to a string of strong results from retailers, including Walmart and Ross Stores. Now, that's also despite consumer sentiment falling in November. Consumers are still willing to shop heading into this busy holiday season, even as worries over financial health seem to be growing. But shares in the pre-market, as you can see, they're down quite heavily, over 7%. Okay, before we go, we told you that probably the biggest catalyst for market moves today is the sentiment around upcoming rate cuts, a rate cut in December. So let's take one moment to dive into exactly what Fed Governor Chris Waller said yesterday. Here's Jen Schoenberger with your Fed Brief.
He still supports a cut in December because he sees a softening in the job market. He actually thinks we're going to see major downward revisions for the September jobs report to the tune of 50 to 60,000 jobs. He thinks, though, when it comes to January and through next year, the FOMC is going to take a meeting by meeting approach because there's going to be a deluge of data that really starts after the Fed's December meeting with that November jobs report, November CPI, as we go into more real-time data next year. And if there's any inflation pop up there, he sort of seemed to indicate that could give the committee pause. He was also asked about his interviews to be the next Fed chair. He said he spoke with Treasury Secretary Scott Bessent about 10 days ago. It went pretty well. He said he would be a great fit for the job and would continue press conferences after every FOMC meeting. So that was Chris Waller. On the flip side, over the weekend, we heard from Boston Fed President Susan Collins, who is a voting member for December, and she reiterated comments that she said on Friday, which is that she does not see a strong need for a rate cut in December, perhaps implying that she could dissent if the rest of the Fed were in favor of voting for a rate cut. Of course, no decision made yet. But I want to go back to the conversation we had on Friday, because that is when the tune was changed for the markets with New York Fed President John Williams, who said that he sees the option of a rate cut in the near term, that there was room for one. And that really changed the odds. And that, again, is so critical because he is one of the so-called troika. He and Chair Powell and Vice Chair Jefferson always are aligned. And the fact that he came out with that speech during a critical time when markets were really split about what is the Fed going to do, some analysts this morning posturing that perhaps Powell gave the New York Fed president the blessing to do so, to sort of signal that to the markets. So again, that is still the comment over the past couple of days that has the most weight for me. We knew, as you said, Fed Governor Waller does support a rate cut for December.
Okay, before we go, let's check in on the markets. Let's start in the world of crypto. And Bitcoin, well, it's edging higher this morning, as you can see. Well, more than edging higher, up almost 2%, but it's still heading for its worst month since June 2022, as I said earlier. And that was when we had a number of corporate collapses. So still a pretty bad month there for Bitcoin. Let's move on to gold. And gold is on the rise this morning as hopes for that Fed rate cut seem to be on the rise too. The precious metal tends to perform well in a low interest rate environment, as we all know. Okay, let's go over to the Asian markets. And Asian markets were up, but the Nikkei in Japan really was pretty much flat there. Optimism around Alphabet's AI moves, though, do seem to be helping stocks in Asia in the main. Let's go over to Europe now. And it's a pretty similar picture to what we saw in Asia just a moment ago. The trading there also in the green too there as well. Okay, let's see where Wall Street will look like when it opens. And after tech's biggest rally since May yesterday, futures look like they're taking a little bit of a breather there. Interesting point though, despite yesterday's rally, we're still heading for a monthly fall. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. I'm Ramzan Karmali. Go own the morning.